Well, good evening, ladies and gentlemen. I would like to thank you so much for once again tuning in to my channel. First of all, before we do begin with this technical analysis for the weekend, I would like to thank each and every one of you who have supported me from day one until today, especially my brothers from India, Ghana, Nigeria, Indonesia, Malaysia, and South Africa. I would also like to extend a warm thank you to the people in Angola, the United States of America, and all of those around the world that have tuned into my channel and are seeing me grow steadily as I continue to produce videos in order to help those of you who are still struggling with technical analysis and so on. So first of all, today we are going to look at DXY. So basically, as you can see, I have opened up my chart on DXY and I've already analyzed the previous weekend. The dollar index is currently indicating a possible bullish continuation, as you can see, but there's gonna be a bit of a struggle because we will face the $103 mark on the dollar index. This is DXY I'm talking about, for those of you who do not know, because that's like where the 50% of the Fibonacci retracement lies for this quick rally movement up, and it's currently presenting a uptrend on the higher time frame. This is the daily time frame basically. So I believe that we should continue to see a bullish uprising on the upcoming week. So the reason why I'm conducting this technical analysis and looking at DXY in particular is because I am looking at DXY as an indicator. It serves as an indicator for gold especially. So when DXY is going up, gold goes down. This is because they have a negative correlation. Negative correlation or correlation means when two pairs move in the same direction or share the same type of movement. But in this case scenario, we have a negative correlation instead of a positive correlation. So gold goes down for as long as DXY keeps rising. Okay, so gold weakens for as long as the dollar strengthens. Okay, and in this case, if we have to talk about gold, remember that gold is the base currency and the American dollar is the quote currency. So if the quote currency rises, the base currency drops. Now let's analyze this all together. So as you can see on my dollar index chart, I do have a uptrending channel, basically, sorry, an uptrend channel. So I just took my channeling tool and drew an uptrend, and this is for me to analyze the trend we are in. And after conducting this technical analysis, it came to me that I was actually correct, according to my prediction. I did use some ICT concepts or smart money concepts strategies to analyze this. And basically, as you can see, there's like a gray rectangle, a long one, this bar down below here before our long position 2, that indicates a zone where order blocks have been marked. And so price clearly came down this area, touched it, and then it just continued to rally up. So basically we are expecting to break the 50% zone of the Fibonacci. This is where the $103.9 mark lies. But before we break, we should expect a retracement below to the $102, and then we will move up all the way to the 106 American dollars. And consequently, this will automatically bring gold down. So let me just fast forward a little bit so that we speak about gold and what I am viewing for the upcoming week. Stay tuned. Okay, talking about gold, remember that all my technical analysis, I have learned that conducting a technical analysis initially on the higher time frames will save you from a lot of heartache. And guys, I'm sorry if you do hear some noise in the background. That is my air conditioner, and I'm really sorry about that. But I'll try as much as possible to eliminate that noise. And I'm also trying as much as possible to speak loud enough. So basically, on the daily time frame, as you can see, the highest point ever recorded on gold this far is the $2,194 mark. This was the highest point ever recorded. And ever since then, we have been dropping until the actual price of 2,156. Looking at the current trading conditions, you are able to visualize that gold is most likely going to continue to drop all the way to the 50% of the Fibonacci retracement tool, which lies around about the $2,090 mark. And once price reaches this area, it should continue to go down, but before that it should bounce up and gain more momentum to break down below. As you know, it's very unlikely for price just to drop all the way down to the 2016 zone, as this is where price initially began to pump, and this is where I've actually initially marked my order block down below. So the order block is somewhere around the 2016 to the 2041 zone on the daily time frame. But as you know, we will have to refine this order block basically all the way from 2016 to 2023 on the daily time frame, and on lower time frames it should be even smaller. But I'm not going to talk about this because this depends on each one of you strategy. According to my strategy, this is no longer how I trade, and I have my reasons for that. But during the course that I will soon be advertising, I will teach you guys the new strategy that I'm trading with, and it can save you from a lot of heartache and a lot of pain. It automatically invalidates trades which will have no good possible outcome. So now, continuing with the technical analysis part of things, remember that I did my technical analysis on the 4-hour chart and on the daily chart. So on the daily chart, I just simply marked out my important zones, as you can see, and this is where they lie. I've also left a few illustrations on the charts, a few writings for you guys to be able to understand what I mean when I say that gold is going to sell. So the highlight of the night is basically that we found a bearish pennant. I hope I spelled it correctly, but if not, all we have to do is make money. Ignore the spelling error. The bearish pennant currently indicates the following. Once the bearish pennant appears on your chart, according to your technical analysis, this is basically by drawing a diagonal uptrend and a descending uptrend, which is also diagonal, or using the trend line tool basically. So diagonal up trend line and diagonal down trend line. So basically I've drawn the two, and I figured that we are before a bearish pennant. A bearish pennant will always signal a bearish movement. Okay, always remember this. A bearish pennant will always signal a bearish movement. But when do we trade this bearish pennant? We only trade this bearish pennant when price breaks below the diagonal uptrend of the bearish pennant. And for educational purposes, I will attach to this chart an example of a bearish pennant, okay, from my chart patterns. Okay, and as you can see, the reason why I've marked out the bearish pennant, we know that once it breaks below, once there is a breakout, the bearish pennant is good for trend line trend line reversal or trending reversal basically. So there was a trend line breakout, and now we can sell below this zone. So the question would be, when were we supposed to enter? So basically on Friday, everyone was supposed to enter at the 2158 zone, but because the market had closed already and price closed at the 2156 zone, we will only sell on Monday, or basically Sunday market open in the evening for us that are in South Africa, at around basically when the market opens. We can look for sales and have our stop losses anywhere above the 2162 zone. So 2162 zone can be our stop loss, and our sell entry positions can be from anywhere from 156 2156 to the 2158 zone. And where will our take profits be? The first one will be at the 2149 basically, and once we break below that, all there is to hold a sell position to the 2090 zone if you're a swing trader. Okay, now the other thing we are going to look at basically is, I have left a few illustrations basically. Okay, so I normally mark out the daily open and the daily closing candle of the previous day to serve as my buying entry point and the sell below zone basically. Okay, so when you see wicks reach and sell below this zone, it means that I will only take trades below this zone, and where you see buy above this zone, I will only take buy positions above that zone. And it just so happens that the sell below zone is currently where the breakout happened, so I can sell this zone. And after price breaks below the 2149 zone, we will then see a massive sell downwards. Okay, because there'll be massive volume. Okay, and then we have the situation of Fibonacci retracement tool, where I said the 50% of the Fibonacci zone lies here at the basically this was at the price of 2166. So if price reverses, it could reach the 2167. So this means that if we enter at 2155, we will be taking out the 2162. But remember that this might not happen, as the selling pressure is very high at this current zone, mainly because the current bearish candle has a very big rejection wick at the top. Okay, so guys, basically for this weekend analysis on gold, this is what we have in store for you. And I hope that for some reason you do watch this video until the end, you like and subscribe to the channel. And if you are looking to trade with us and join our community, please remember that we have a VIP signals channel. Okay, this is where you can take our signals on a daily basis with above 80% accuracy daily, especially on gold. But we do trade other pairs like US30, US100, and other currency pairs as well. I'm taking this moment basically to advertise my service, and I will also include this on the video. Remember that we also have a free signal channel where I call the private club. You can join it at any time. You will be able to receive very few signals, but which are also accurate. It's at the same time, and you will be able to chat with other traders who are inside that channel. Okay, so guys, thank you very much. I hope that I will help somebody out there who's trading gold or holding gold positions. If you're already holding gold sales, please continue to hold your sell positions, because you are on the right track, and selling is the best thing to do right now. Buying is basically for scalping reasons on lower time frames, but remember that if you're not smart enough, you're going to get caught off guard and the sellers are going to win next week. So enjoy. Thank you very much. Take care.